What is going on, everybody? Welcome back to Trading Learning 101. Today's video, we're going to talk about Fibonacci moving averages. If you know me, I am a Fibonacci fan. I love Fibonacci. I've made many videos on Fibonacci. So far, I have a total of 9 videos. I have a special playlist dedicated to Fibonacci. I will leave a link down in the video description or up above right here. Check it out, guys. I have so many videos and great content on Fibonacci. Learn from these videos and develop your own trading style and strategies. There's multiple ways you can use Fibonacci in the stock market and as a day trader. Fibonacci retracements, projections, moving averages, Fibonacci time ratios, Fibonacci arcs, Fibonacci spirals, many different ways. And the way you have to look at Fibonacci, this is not a science, it's an art form. Consider yourself a scientist and a detective. You're testing, refining, testing, refining, testing, until you start to see results that you like and results that can generate you profits as a trader. With this video, we're going to go over a couple ways that I like to use Fibonacci moving averages, the basics of Fibonacci moving averages. I've been trading for a total of 5 years now, and still to this day, I use Fibonacci with my trading. You're going to see many types of people use Fibonacci in all different types of ways. This video, this is how I like to use it. Take from it what you want and develop your own strategy. If you're new to the channel, please hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. And without further delay, let's jump into the video. As a reference, here is the Fibonacci sequence. And if you're familiar with the sequence, it starts with 1 and then 2. And then as you continue in the sequence, you add the previous number to get the next number. So 1, then 2 plus 1 is 3. 3 plus 2 is 5. 3 plus 5 is 8. 8 plus 5 is 13, and so on. Now, to mess with Fibonacci moving averages, all you simply do, and it doesn't matter if you use a simple moving average or an exponential moving average. For the length of that moving average, just use one of the Fibonacci numbers. I like to use exponential moving averages because they move a little bit quicker than simple moving averages. And we're going to go over some charts with some examples on how I plotted these moving averages out and how the stock and the chart itself was moving around with these moving averages. Here's an example right here with the red line and the blue line. You can see how the stock chart was in a downtrend, and this blue line was acting as resistance as the stock was trending down. But then once the stock started to consolidate right here at this $11, it got up and above that blue moving average, just below that red moving average, and then the blue moving average came up to that red moving average here and squeezed over it and pushed up even higher. Here's another example. Stock recently had a big gap down, sold off all right here, came up, and then you can see this blue line was acting as support. It fell below it, acting as resistance, and then it came back up and it reclaimed it. And you can see the little squeeze action right here with the two moving averages, pushed up to this green moving average, got really tight. The blue moving average pushed up over the green moving average and squeezed up even higher. But let's take a look at some more examples. Now, if we go into the settings, I can show you guys right here on the right side what I'm using. I'm using the 8 EMA, which is colored orange or yellow. I'm using the 55 EMA, which is colored blue, and I'm using the 233 EMA, which is colored red. And again, these are exponential moving averages, and the lower the number that you use, the faster that moving average is going to move. The bigger the number, the more lag is going to have on it. And this is just all personal preference. I'm always messing around with different numbers and plotting them on my charts and different time frames as well. For the 10-minute chart, I like to keep them a little bit on the low side using the 8, the 55, and the 233 EMA. And as I said, this is all just personal preference. Take what you want from this and how I use these and develop your own trading method. This is what's so fascinating about the stock market. You see how other traders view the stock market and their beliefs. Take what you want from multiple traders and develop your own style and strategies as a trader and an investor. So first up with Sava here, we're looking at a 10-minute time frame. The blue line, the 55 EMA, you could see all right here was acting as resistance. And then it was resistance right there. And then the yellow line, I hope you guys can see it. I'll zoom in on this chart. It got really, really tight right here. And you could see it formed a squeeze. That yellow 8 EMA got really close up to that 55 blue EMA. And it squeezed. And it had a huge gap up way up here. And then the stock trended down, and you could see right where it bounced at, right here, where that yellow line is, where the 8 EMA is. Great opportunity right there, just trading an 8 EMA Fibonacci moving average. The stock gapped up, it sold off, and it bounced right there from $9, $10, all the way up to $10.50, right here to up here. And then when it came back down, it bounced as support again right there, but it was short-lived and it continued trending down. And then you could see, I'll zoom in a little bit more, that yellow line, which is the 8 EMA, was acting all as resistance right there. And then it came down and it crossed below that red EMA, which is the 233 EMA. Continued going lower and lower and lower. And then it crossed below the blue EMA, which is the 55 EMA. And then real quickly, let's take a look at the 1 minute on Sava here. And these are just examples. So on my 1 minute time frame, I have the 55 EMA, which is the blue line. And I have the 233 EMA, which is the red line. The orange line is the VWAP. For the blue line, you can see it was acting all as resistance right here, was trying to hold up as support right there, was holding as support right there, but fell below it, all acting as resistance right there, and then the stock got above it and ramped all the way up to that red EMA right here, which is the 233 EMA, and then look at right here, it was all holding as support. But it failed. For me, as a trader, as a day trader, I will say, my time frames are the 1 minute, the 3 minute, and the 10-minute chart. And then I look at the daily chart also. So, real quickly, let's take a look at the S&P 500 with the Fibonacci moving averages applied to it. This is a 3-minute time frame on the S&P 500. Again, the red line is the 233 EMA. The blue line is the 55 EMA. And the orange line is the VWAP. So for the blue line, you can see right here, the stock spiked up. And then it had this pullback right here. Surged up. And then the red line was holding as support right there. It came down and it held as support right there. Even the blue line started to move up, and you can see that blue line crossed above that red line, indicating trending higher and squeezing higher. But look at how many times this stock came down and hit support on it. Right there, right there, right there, all right here. And then it fell below it and it was acting as resistance all right here. And then was holding as support all right up in here, trending its way on up. It's all about how you look at the charts with these moving averages and identifying the trend. That's what I try to keep in mind when using these moving averages. I'm not relying on these moving averages. The moving averages help me identify the trend and what's going on. That's how I look at these moving averages. But a little cool thing right here, when this blue moving average was coming down and looking like it was going to cross below the red moving average, what it simply did was it bounced right off of it and came right up to that VWAP, crossed over the VWAP, and continued trending higher and higher, even on increased volume, all right here. And again, this is all just personal preference. Here is the Fibonacci list again. Go through, mess around with it. Use the simple moving average, the exponential moving average, and just plot these Fibonacci numbers as the moving average. The numbers that I like to use and that I've found that I like to use and that works for me is the 8, the 13, the 21, the 55, and the 233. Those are the numbers that I like to use, but a lot of times I just stick with the 8, the 55, and the 233. You guys can use whatever you want. I've seen some people, when I look it up on the internet, they like to use the 13 and the 55. Some people like to use just the 8 and the 21. Some like to use the 13 and the 21. There's multiple different variations and ways you could use these numbers as moving averages. And like I stated earlier in this video, this is not a science. This is an art form. So test these out and use whatever works for you. Because in the stock market, we don't trade stocks. What we trade are our beliefs. We trade beliefs of past experiences in the stock market and in life. Fear and greed. The stock market is all emotional driven. This is why you see Fibonacci work time and time again, because it's natural. Let's take a look at another example here on DOGZ. Moving averages and Fibonacci moving averages, they're not going to work all the time. And an example of that is the 1 minute time frame right here. You can see I have my Fibonacci moving averages plotted out all on this chart. And you could just see the stock was just going in and out of these moving averages right here. Not really holding as support, not really holding as resistance. It could be hit or miss, but I still like to use Fibonacci moving averages. Now this is a 10-minute time frame, and this is where the Fibonacci moving averages make more sense. This yellow line right here is the 8 EMA. Stock popped up, came back down right here, and bounced right at that 8 EMA from 240 up to 280. Came back down, held as support again, but then it fell through and it was acting as resistance all right here. Was holding as support all right here. Stock popped up over that yellow EMA again, came back down, bounced off that blue line, and curved right back up, but then it slammed down and had a death candle right here. And you could see the 8 EMA quickly came down to that blue EMA, was crossing below it a death cross, and was holding as resistance. The stock did pop over it, but could not hold above it with that wick right here. And you could see with the trend of this 8 EMA, the pops right here. It was getting a pop right there, a pop right there. It had one little pop right there, but it was short-lived. Here's one more quick example with the Fibonacci moving averages. KXIN had a quick pop here from 470s up to 630s. When it popped up way up here, and when it pulled all the way back down, that blue line right here, it bounced and held as support, but then it fell through it to the next Fibonacci level, that red line, and was holding as support all right here. And it got really tight, and then it squeezed up over that blue line, the 55 EMA, and then was holding as support all right here, and then fell below it and then was acting all as resistance. And then the stock pretty much went sideways the rest of the day. Through my career of using Fibonacci moving averages, they don't work 100% or even 75% of the time. But when they do work and they confine to the chart, it's a beautiful thing. I'll say that. If you're a Fibonacci geek, I would say give this a try. See what you can come up with the numbers, combining the numbers. There's multiple different ways you can use the Fibonacci sequence with moving averages. Multiple different ways. And there's multiple different trading strategies and styles that you could do with Fibonacci. Have fun with it. Experiment with it. Remember, you're a scientist. You're testing, refining, testing, refining, testing again. Using Fibonacci with technical analysis, this is not a science, it's an art form. Nothing's going to work 100%, 90% of the time. Experiment, mess around, do what works for you. Because at the end of the day, that's the important thing. If you can consistently pull money out of the stock market with a consistent trading strategy and a style that you've developed, that's a very good job. And not many people can do that successfully. I hope I was able to give you guys enough examples of the Fibonacci moving averages. It's pretty simple and straightforward. There's no hidden secret or way you could use this. Have fun with it, and I hope you guys enjoyed this video. If you want to watch more videos on Fibonacci, I will leave a link to the Fibonacci playlist that I've created, either above or in the video description below. Check it out. I have a lot of cool stuff in there for you guys. Again, if you're new to the channel, please hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. And until next time, everybody, have that patience, have that discipline, study, study, study. Later.
The most valuable commodity I know of is information. Wouldn't you agree?